Hello and welcome to what I'm buying this week with the unemployed value degen. And it was an interesting week, although maybe not quite as exciting as last week. But it kind of left off with a cliffhanger, like between volume one and volume two of a book, and they really left us on a cliffhanger. Um, Go to the one day. Yeah, the one day. So Friday had a pretty sizable sell-off in small stocks and in value stocks. And what's interesting about that is now a Friday sell-off is common. For some parts of last year, it was a pattern that didn't hold, but there are quantitative strategies which completely sell out of the market on Friday and buy back in on Monday in order to avoid geopolitical risk. And we had an aircraft carrier moving to the waters off of Iran, however you pronounce it, announced last week. So I think odds were pretty good coming into the weekend that something could happen, some sort of a bombing of Iran, maybe a coup on the Khomeini. And I don't think people are expecting it to be as smooth as removing Maduro. And I don't know if that's going to happen or not, but it is something a lot of people are talking about. So this sell-off on Friday could have been because of geopolitics. People wanted to get out of the market. And most people don't behave that way, but there's enough money in the quantitative strategies that do, that this is very common behavior. And if that was everything, we would expect Monday to be just as green as Friday was red, maybe even a little bit more. But beyond that was large growth outperforming. And that's concerning because we've been for 3 months, we've been in this beautiful world. I mean, this is like the small cap value stealth bomber formation. Just a beautiful tailwind for small value for the last maybe 4 months. And I'm looking to see if this pattern reverses. In the last few years, this would start out in January after the tax loss harvesting rebound, but then it would fall apart as soon as Nvidia announced earnings. And we're heading into next week, tech is going to announce their fourth quarter earnings. So the chance that this pattern reverses next week is very real. I don't think that's what's happening. Sometimes you just have an upside down day. People call it a reversal, upside down day, whatever the main trend is. Every couple of weeks you get an upside down day. So the most likely scenario is that Friday was, selling out in anticipation of geopolitical risk, and it was an upside down day. And when we come back on Monday, we'll probably expect a green day with small value outperforming large growth. That's my base case scenario. But it's just worth considering the possibility that the small value rally is over. I don't think it is, but it's very possible. I think this year, 2026, is going to be a year where small caps outperform because the AI narrative is weighing on big tech. And I can pull up the NASDAQ chart while I talk about this, but big tech isn't, this is the NASDAQ chart, it's big tech is not capital light anymore. I have AI CapEx, so the CapEx is here now, but the AI revenue isn't. Now the AI revenue might come, or the benefits might accrue to companies downstream. There was a new narrative shift. There was a new narrative shift for AI, which, 2 weeks ago, the conversation was, well, AI is using so much electricity, local governments are voting against having data centers built there, and nobody likes these jerks, and Trump is tweeting about they have to contribute more power to the grid. And the narrative just shifted to, now suddenly people are saying, AI is going to invent new drugs, and we're going to start seeing some of these new life-saving drugs sooner, and AI might help you live 10 years longer and things like that. So the new narrative is that AI is going to be worth these electricity costs because of the new drugs they're going to develop. So it's kind of